Hey everyone, welcome back. If you ever heard people throwing around words like stocks, bonds, or diversification and thought, I kind of know what that means, but not really. Don't worry. Today I'm breaking down the 4 essential investing terms that every beginner needs to understand before they start putting money into the market. So we're going to keep this simple. We'll get straight to the point, and at the end you're going to know exactly what these terms mean and their definitions. Okay? We'll start off with stocks. A stock is basically ownership in a company. When you buy like a share of Apple, you literally own a tiny piece of Apple. You're an owner. If the company grows and makes more money, your stock usually increases in value. And sometimes you even get paid some dividends depending on the stock and what they offer. And dividends is a share of the profits. They want to make sure that you feel good about owning their stock, so they give you a little piece of what they make when they earn more money. Stocks are the growth engine of most portfolios, but they also are more risky because prices can go up and down daily. So you got to be careful and understand your stock and understand what's going on in the market, and is it the right stock for you to invest in, or is it a little bit too risky? Bonds. Bond is like the opposite of a stock. Instead of owning a company, you're lending money to a company or a government. In return, they agree to pay you with interest. So bonds are usually more stable and predictable than stocks, but their returns are lower. So you don't get as high of a return, or the chance of as high of a return. But together, when you put stocks and bonds, they balance each other out, and it helps you with stability and growth. A portfolio, your portfolios are just a fancy word for your collection of all your investments. If you own a few stocks, a couple bonds, maybe even some ETFs, which we'll go over later, that becomes your portfolio. Think of it as like that's your financial team, and you're working together. And some of your players are on offense, which are the stocks, and some of your players are on defense, which are the bonds. And when you put them together, it helps you to reach your goals. That brings you to diversification, which is what we just talked about. There's a one golden rule: don't put all your eggs in one basket. So instead of betting everything on one stock or one sector, you can spread the money across different types of investments, like tech, healthcare, energy, U.S. companies, some international companies, and stocks and bonds, like individual stocks. Why do you want to do that? Because if your portfolio struggles in one sector or one area, the other parts can help balance you out, so that you're just not constantly losing and losing and losing, Diversification lowers your risk without necessarily lowering your long-term returns. So to recap, stocks are ownership, bonds are loans, and portfolio is your whole collection. And diversification is a strategy that ties it all together. If we can master these 4 terms, and then we start with the foundation of everything else for investing. So make sure you like, subscribe, go to my YouTube channel and see some of the videos that I'm putting up. I'm putting these on Instagram. I'll probably convert them over to YouTube eventually, but just want to be here to help these beginning investors really understand what it's like to get started investing, and not bog you down with all these terms and things that are just too hard for you to get involved. We're going to start real simple, real easy, right to the point, okay? And you guys know my slogan: we got us, all right? So talk to you soon. See you later.
I say chase your dreams, man. Do that thing, man, that keeps you up at night. That thing that bothers you, man, that makes you trip. You can't quit thinking about it. That's what you got to chase.